I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, welcome back from the holidays. We were just saying it's kind of tough to be back right now.
Oh, it is, but I'm watching the Cloud Kings have a major reversal here. Salesforce reports this week. Adobe had a big run. Workday coming in, ServiceNow coming in. So I find myself thinking this. I find myself thinking, once again, rotation out of high multiples and locking in gains. And those usually presage a decline in the market. So let's be a little careful. We've been raising cash at Action Alerts. I never like to see those stocks down because when they go down, they go in unison because of ETFs, and it usually means that people believe that there's been too big a multiple expansion, particularly when there's nothing negative.
Jim, I want to ask you about your real money column this morning, which focused on two stocks. I don't want to give them away because you really got to read this column, but it focused on two stocks that are being heavily impacted by Democratic candidates and the election so far. Right. So based on that, should investors be worried going into an election year about the market?
Well, I think that you have to pay very close attention to the polls. Now, should you? We're early. There's a tremendous belief that you can gauge things by who's in front. But as someone who used to do political stuff and used to leaflet for people who were in front, I can tell you that it's a very dicey thing to change your portfolio back and forth based on who's leading the polls. But the bottom in the healthcare, managed care, and bank stocks came right at the time of the peak of Elizabeth Warren's polling. And it's all downhill from there, and that's one of the reasons why the stocks have really rallied.
So, of course, head on over to realmoney.com to read the full column.
Enjoy that. I mean, I think that we're doing some great stuff from Real Money, and I'm very proud of it, and I think that people should recognize that a lot of market-moving stuff there.
Let's talk about Cyber Monday. Now, one thing that stood out to me, besides the fact that Adobe Analytics forecast that we're going to see about $9.4 billion spent today, which is pretty crazy, but one thing that stood out to me was that they said that most of that spending will be done in the palm of people's hands, from their phones.
Yeah, I thought that was very interesting. That's very much of a Chinese tradition, too. This is a remarkable holiday season because you can price compare on your phone. The desktop is, as Mark Zuckerberg recognized, the desktop is going away. But I question, only a couple companies have been able to make it so that the gross margins are good. Target, Walmart, so they can handle the influx of orders. This decline in the market today, I think, is some of it is because that maybe spending wasn't so good, and some of it was because there's a belief that maybe a lot of these companies are involved with selling, and I don't know. I'm a little astonished that they're down so much. Adobe being down a lot is really extraordinary. Adobe, I thought the quarter's going to be very strong. So it's important to stay close because this decline, which very few people expected, which I will talk about tonight on Mad Money, is painful and is as strong as I've seen at the beginning of a month in a long time, and I don't think it's over.
You just mentioned Mark Zuckerberg, and that sparked a question for me, which is, how important is it for retailers to have a presence on a platform such as Instagram?
I think it's incredibly important. I think it's very difficult to reach people otherwise. I think Twitter has stalled right now. A lot of them I thought would be political ads. Instagram is the easiest way to reach people other than Amazon and Google. Amazon and Google doing very, very well, but you know what, again, Amazon underperforming. Google is one of those companies that is in the crosshairs of the sellers today, and the sellers don't have any, one of the things that has happened that I always worry about is when I see a stock like Visa, down for Visa being fintech, saying, listen, stay away from anything tech today and let it come in. Don't be a hero. When there's no reason why they're going down, you tend to find a reason the next day. So don't be a hero. Don't buy the fintechs, and don't buy the SaaS stocks, the cloud stocks. Too early. Maybe people are worried about Salesforce. I don't know. But I just want to alert people that this kind of decline should never be bought on the first day.
Now, Amazon is our real money stock of the day today. Jim, let's say that we give Amazon a gold star for its one-day shipping, even though Walmart has it and a couple other retailers have it. But how can Target and Walmart if they can, ever catch up to Amazon?
Well, they've spent a lot of money, and Target has shipped. Brilliant acquisition, SHIPT. Walmart has spent, they bought Jet. And Mark Lowry has done a remarkable job. That was a very shrewd acquisition. People thought they paid too much at the time. But you know what? You can cut deals with web service companies. You can train your people to use the stores as depots. It's not all bad to have a brick and mortar presence, but you have to spend. Did Kohl's underspend? Did Macy's underspend? I don't know. The Bears have decided that no matter what they do, they underspend. And there was a very good article this weekend about how much money is being made shorting Kohl's and Macy's, and a lot of that seems very self-fulfilling, meaning that you can really lay down on a stock, and that's what's going on. But I've got to tell you, I'm seeing tremendous dislocations in some of the big SaaS stocks, so be careful.
And before we go, Jim, I've got one final question for you. We have talked to the Chinese and said that we might be able to stop the December 15th tariffs before we put them into place, but the Chinese are now asking for us to roll back tariffs.
Yeah, that was stupid.
Are we going to see a headline on that?
They must
this
not
week?
want a deal. They don't want a deal if that's the case. I think they've gotten some stronger numbers. I think that they're misreading the impeachment hearings. They think that the president's been weakened. I haven't seen that myself.
All right, Jim, thanks for joining us today and welcome back.
Remember, do not buy the first day of a SaaS cloud decline. Do not buy the first day. Wait to see why it's happening. Okay?
Great advice as always. Now we're going to head over to our Action Alerts Plus Daily Rundown show where we have an exciting new name that we're going to bring up and we're going to explain why they initiated a position there. So head on over to actionalertsplus.com. I'm Catherine Ross and I'll see you tomorrow.